Welcome everybody. This is the Thursday evening Viper trading webinar. First we have to get through our disclaimer and we can get straight away onto some charts and look at some trades, which of course is why everybody's here tonight. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everyone in here does know tonight that you do trade at your own sole discretion. Okay, well, tonight's topic is trading V reversals, how to identify them, how to trade them. A lot of times they will happen. I'm here. Let me get over to a chart. Let me get over to a chart and get straight away onto our subject at hand here. So let's see, that would be screen. Yeah, screen 4. Okay, here we go. Okay, so what we're going to talk about tonight is some patterns that I've noticed over the years that tend to occur and reoccur at certain times of the day. And this is not unusual, and you may have noticed it yourself, that right around the 7 o'clock a.m. Pacific time. This is all Pacific time. Most of you know, of course, I'm here in California. So market open, 6:30 is over here. Over here, okay? And here's 7 o'clock, 7 o'clock Pacific, 10 o'clock Eastern, of course, would be right in here. Right around in here, 7 o'clock. So let's talk about this a little bit. Let's talk about this. You can see that shortly after the market open, we kind of, and this is YM. I'm going to go through a lot of different instruments. I'm just starting on YM. There's a question from Joseph here. Yeah. You know, we're going to look at several different setups that look like this, and we're going to discuss how to deal with them. But so before we get into 7 o'clock, let's talk about what happened. You can see to the left here, just shortly after the open, we kind of chopped around on NASI a little bit. There was a little bit of sell-off. You got a little blip open at the little blip up at the open. Came down, you know, sort of chopped around here a little bit, kind of a little double, triple bottom. We come back up, we break the swing. You know, if you didn't catch that move off the little consolidation patch right here, this would have been a good OT box. And even if you can get that, we had a textbook retracement into what we call the midband here. I think we called this out, as I recall. I think we called this out. When it came right in here, we said to buy this support area on a bounce. And of course, we got a nice little follow-on trade here. And by the way, most of you know, and you've been in the room, and you've heard us say this a million times, but I'm going to keep saying it until it really drives home for everybody, is that really, 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 in these markets, you only want to try to get 1 or 2 good winners in the morning. That's really all you need, you know. So I guess what I'm trying to say to you is that before you ever got to 7 o'clock on YM, you actually had a couple of very nice trades here. You had this nice trade that popped up. Depending on your entries, you know, you probably got 55 to, I don't know, you might have caught maybe 30, 35 ticks on this little move. And then the little bounce consolidation right off the midband here on the retracement, about 6:45 Pacific, 82 to 15. Yeah, you might have got 20, 25 ticks, depending on your fills and exits here. I'm trying to say that explicitly what I'm trying to say here is that this could have been your 1 or 2 and dones in 20 minutes of the market open. All right, and that's what we're looking for. All right, you don't have to feel like you have to trade all morning long and all afternoon and sit in front of your screen for hours and hours at a time. That's really not what we want to do. We want to find a good instrument that we like, sort of be very careful, cautious, and cherry pick our entries and really just wait for the optimal setups that we like. Pull the trigger, get in and out, expose yourself to the market just for, you know, a couple of 5 minutes at a time, however long it lasts, and you're done. But if you didn't, let's say you missed those 2, okay? We come back here to the midband, and in this particular case, just before 7 a.m. Pacific, you can see we did another consolidation patch right in here. These are textbook Object trader region boxes right here, just textbook. And then we get a sell-off. We get a nice sell-off where the market drops down into to this area right here. Here again, any entry here, either off of the break out of the box, or even this little retracement that you got right here. This happens a lot, right? When you break a swing in a support area, normally within some period of time, you get a retracement that comes up and checks somewhere at or near where it broke down. Sometimes it'll go a little higher, might come up into here. Sometimes it might not quite get there. Sometimes it'll hit it right on the button. So obviously, if you didn't catch the initial break out of this box, you did get a retracement to give you a chance to get in short. Yes. All right. So we kind of chop our way on down. Now let's get over to the 7 o'clock area that I want to focus on, because this was the early morning stuff in the first half an hour. Now notice what you do here. This is an important pattern that we should all try to commit to memory if we can. It is the following. Here we have kind of a final thrust in the market on YM here. And we get a retracement back up, almost kind of touching the midband. And at the time this occurred, of course, this could have been a short reentry. Now, when markets retrace like this, in any market, whether it's retracing up or it's retracing back on an uptrend like this one here, I'm going to ask a question because I've said this in other webinars, so I'm going to do a quick sort of quiz for everybody tonight. When you have a trending move down or a trending move up, and you have retracements, what is actually happening in the market when the retracements are happening? What's going on there? What is a retracement in a trend? What is that? Anybody know? It's 2 words. I'm not going to give you any more hints. If I give it too much a hint, I'm going to give it away. What is that? What is a retracement when it pulls back, when a trend is in play, and you get retracements? What's happening? What's physically happening in the market on a trend move, on a retracement? Good. All right. That's good. All right. I'm just checking to make sure because I've said this a gazillion times in other webinars, and I'm just, checking to make sure everybody's sort of paying attention to what I'm saying. It's profit taking. Exactly. That's what that is. It's profit taking. Profit taking. Okay. And so what happens, and I'll just say this there's some new people in here. Okay. So when a market starts trending, as you did on the up move here, the bulls are in control. The buyers, the buying programs, the scripts, the algorithms, everything is pushing the market higher. Okay, the bulls are in control. Green background, blue bars, they're stepping up. We all know that, yes? Now, everybody who bought from lower levels, including the scripts and the algorithms that are running, the buy programs, they have to take some profits. When they take profits, you get retracements in a trend, and then they reach an equilibrium point, which it did right here. Generally, when you have equilibrium, on a retracement, most of the time you'll get some yellow bars. It will go sideways. And what's happening is the profit taking is starting to wane a little bit in here until the buying resumes when it starts to break back up here. Now the bulls are in control again. They push it higher, push it higher, push it higher. And then lots of traders who are long from much lower levels perhaps, now start taking profits, and we get the retracement cycle again, right? Off the fresh swing high up here. We reach the equilibrium point. Now, when these equilibrium points are reached at or near the midband and we get consolidation, 2 things, well, we can chop, right? That's obvious. It could go sideways. Or if the bulls were going to resume their buying, it would do something like this. If you had a movement like that, then we know that it's still an uptrend. The bulls are in control and we're still buying the market, right? Yeah, traders are cashing in, Joe K. That's right. Traders are cashing in. However, when you have a breakdown of a support area, what's happened is you have a change in power. The bears are now in control. The sell programs have kicked in, and it's going to start pushing the market lower. This is called a trend change. When this occurs, you're changing from an uptrend to a downtrend, and now the sellers are in control, and we are selling resistance, right? which we talked about that you got on the retracement back up into here. Everybody following me on that? Right? Does that make sense? Everybody following that? And then the cycle repeats itself. You have what's called a thrust in the trend direction down. You have a retracement, comes up to resistance, rolls over, back down. Bears still in control. Sell program still pushing the market lower, right? Hitting fresh swing lows. We come up, we check the mid-band again, one more time on a retracement. Profit taking. In the case of the downtrend, it is what's called short covering, right? It's the same thing that you do when you sell a market. You're shorting it. And so when you buy, it's called buy to cover. You're buying the market to cover your short position. So that's the same thing that traders around the world and scripts and algorithms do every day, right? Now, here's what starts to happen. And by the way, I'm going to digress for a second. No, I'll circle back and talk about that in a minute. I want to stay focused here for a second. I'm going to blow this up right at 7 o'clock, right around now. When I say 7 a.m. Pacific, I want to be clear. I'm not saying exactly at 7 a.m. Precisely at 7 a.m. you will get a V bottom or a V top. That's not what I'm saying. What I'm saying is the tendency in most markets on most days are that some type of reversal occurs around 7 o'clock. Okay, let's all be clear about that. I'm not saying right at the dot, although you can see pretty clearly at 7 o'clock that turned out to be a bottom. But the fact of the matter is it can happen a couple of 5 minutes before 7 o'clock, or it can happen 5 or 10 minutes after 7 o'clock. We're using 7 o'clock as kind of an area of time. Okay? Does everybody follow that? By the way, we got some, hey, Balraj, good to see you can make it. Don't worry, we're just still kind of getting started here. You just missed a little bit. We got a lot to cover, so don't worry about it. I see some other folks coming in. Don't worry. It's okay. This is a recorder. We're going to put it on the web tomorrow. All right, now here's the pattern I was talking about that we have to commit to memory, if you can. It is as follows. You get sort of one more push down, and the first clue that something could be afoot here is the fact that this swing level does not get back down to this level right here. Everybody see that? When this happens, and we normally observe that in the room, you normally will hear one of us say something like, that last swing on YM only got down to 45. We didn't check the swing lows at 38. That's a little bit of concern. When you're looking at V bottoms or possible trend reversals, that's normally clue one. So essentially what's happened here is that the sellers have tried to repeat, their downward thrusting motion as they did here in the downtrend, and if the downtrend was going to continue and the seller's in control, then it should take this area out, right? It should just take that out, and the downward momentum should continue. Well, that didn't happen. Okay, now look what happens. We come back up, and I want to be clear about this. This is not buying necessarily kicking in yet. This is still short covering, right? Still short covering, and we reach what's called, what we've seen 3 of these boxes so far on this chart. What is that? What is it when bars consolidate around the midband? They go sideways in a yellow manner like this. What do we say on these other 3 boxes? What was the terminology we used for that on these other boxes here? Right here, 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 and over here. What is when markets come up and they consolidate like this? Equilibrium, right? The bulls and the bears are more or less, the powers are kind of equal. They're pushing, tugging against each other, trying to decide which way they're going to push the market. Kathy, the blue dots, the dots here, these dots are called trailing stop dots. And they're generally going to be in an uptrend below the market. You can use them as a trailing stop. Or you can use the dashes. The dashes are what are called the swing high-low, breakout swing high-low indicator. Okay? That's the dashes. The dashes will be on the top or the bottom, depending on the trend direction, and the dots will be above or below, depending on the trend direction. They will change color. Okay, so we reach another equilibrium over here. We didn't take out the low. That did not happen. And we come up and we reach an equilibrium. Now, this is the pattern. These are the patterns I'm talking about right here. Here it happens again. We come up a little bit, we pull back, we hold a higher low, and then we push up through the swing, giving us a trend change right here. Everybody see that? This all happened right around 7 o'clock. 7 o'clock in this particular case on YM, which was this morning, turned out to be a swing low for the morning right here, for now, right? We come up, we do our little sort of ABC pattern that comes up through. Could have boxed this in, allowing it to move either way with the OT region tool. You might have been head faked into a short if you allowed it to take shorts, depending on how you drew the box. Maybe, maybe not, depending on how you drew it. Either way, you would have been filled long on this bar. Another way to do it, if you don't box it in, would be to put a buy order above that swing, and you'd be filled on this bar, long. Now, if you didn't catch that move, okay, we get one more retracement into support that occurred around 7:10, and it was right here. In fact, I think we might have called that one too. We call so many trades, I can't remember all of them, but we go just a little bit below the mid-band. We consolidate just a little bit here like this. Here again, profit taking from the bulls. Long traders are taking their profits and they're pushing it down to a support point. We get a little bit of a bounce and you get one more follow on long. Now, without looking any further on this chart, and we get this all the time where traders say, well, you know, I can't tell if a market's going up, down, or sideways in real time because the bars are shooting all over the place. Right? I hear that all the time. Well, you know, it's easy to be an armchair quarterback when you're sitting here in your nice comfy chair at 6:30, at 5:30 at night, looking back and cherry picking trades. And how do you know when it's happening in real time, especially when it's chopping around? How do you know? I hear that all the time. And I love that. I love to hear that. Because here's why. Look at the right-hand side of that chart and tell me what's going on. Right here. What's going on right here? I mean, it's you had the bounce at 7:09 with the long follow-on yellow bar bounce off of the mid-band, and now we're starting to do this. What is this? You're about two more minutes after 7:10, 3 more minutes after 7:10. So you're watching. You took that bounce trade, made a few ticks off of it. What's it starting to do right here? Right here. Anybody? What is it doing? What would you characterize this type of price action? How would you characterize this right here? You're 3 minutes into it. What would you call it? Getting some feedback from the team here. Hardy says consolidation. Joseph stalling around, sideways. Kim, Walter weighing in, consolidation. Chris, John, chop. Okay. Stalling out. Exactly. Now, wouldn't we all agree here tonight that I'm going to put a couple of lines on here that you could do on your charts, just like Gary does in the room. You could put a line right in here. I'm just going to put a couple on, and we'll just kind of watch, okay? You could put a line right in there. I'll make them big so we can see them. You could put a line there, and you could even also put a line, you know, kind of up in there. And, of course, you could put a line at the swing down here. Now, before I advance this chart any further, I want us all to be on the same page, and let's all pinky swear and agree that as long as it stays in between those lines, we are going sideways, and it is chopping. Will we all agree to that? All right, let's go ahead and advance the chart. Ready? Here we go. Are we still in? Are we still between the lines? How about now? We still between the lines? What about now? Still between the lines? It's getting worse. It's getting worse. Not only was it chopping around here, and at least the bars were blue and the background was green. You know, at least we had some feeling that perhaps we might break up and go higher, right? But now what's happening? You got a transitional background which has no color at all, and you got yellow bars, and it's oscillating around the midband. Is this a trend? In fact, for that matter, is it tradable? Is this tradable? Is this trending, and is it tradable? Yes or no? This whole swath right here. Now, what I'm trying to tell you is that now at this chart, we're on 725, and we started watching the chop unfold here at 713. So we're 10, 12, 15 minutes into it. And it's chopping around, and we put our lines on, and we're yellow and sideways inside the box. This is not tradable. Most of you said no. Michael P., Jonathan, David, good. Kenneth, Walter. Yeah, this is absolutely not tradable. In fact, as I recall at this part of the time, when YM was going sideways, I said, I'm not taking any more trades because I'd already nailed some good trades over here, and I was up nicely for the day. And I'm just, it's up to you, but I'm just not going to get in the middle of this. I mean, for me personally, I have to see it. It's got to break one way or another and then do some kind of retracement. Those are trades I'm interested in. But when it's going sideways like a sloppy yellow mess, I'm not interested in it. I don't want to. I'm not going to trade. I don't care if I have to sit there an hour and watch it. All right, now I'm going to advance it a little bit more, and I'm going to advance it beyond here, and then we're going to observe what happens. Ready? And then we'll move on to another chart. Here we're still going sideways. We're still going. Your bars are yellow. Background is just bouncing around between here. By the way, if you're a scalper, I saw some comments about scalping it. If your skill sets are such that you like to scalp and you're good at scalping tight ranges, by all means scalp it. If you have some clearly defined support and resistance levels, and you want to buy and take some profits up here, or you want to sell and take some profits down here, by all means do it. I'm not saying it's just it, but for me personally, it's not tradable. I'm not interested in trading that. I'm interested in moves where I can make some money on a reliable move. Now let's watch what happens here. What happens right there? Let me blow it up so we're all on the same page here. This is fairly significant. What happens right here? What is that? It broke through support. It's been sitting at that above that support level, chopping around for the better part of 15, 20 minutes, and it finally took it out. So if in fact this was a resumption of a downtrend, what should happen? Looking beyond the right-hand side of this chart, anticipating what might happen, what will we be looking for to happen to potentially take a trade? We've taught this in other webinars. This is looking beyond the right edge. And there's several webinars on the website that talk about this in great detail. Planning your next trade, looking for the next trade setup. There's all manner of them. I'll look them up before we wrap tonight. I'll show you where they're at. They're very good. A whole hour dedicated to this topic. What are we looking for when support is broken and we are anticipating a potential downtrend move afoot? Good. We got to see a retrace. Right. We got to see a pullback. Jonathan, David, Michael P. got that. Kim. We want to see a force down, a push down, and some kind of retracement, because we all agree here we're not going to buy and sell thrust moves. A thrust move is where a move pushes in a trend direction. We're not doing that. We are retracement traders, right? Okay, so if it pulls back, where might it pull back to? Where might it pull back to? If we get a retracement off the swing down here at 64 or lower, where might it go back to? Here again, this is the looking beyond the right edge, anticipating potential retracements off a thrust move. Where might it go? Where would we be looking for a potential trade setup? Seen some good answers coming in. 77 from Joseph. Hardy at 83. A lot of mid-band calls. Ted, where it broke down. Good, Jonathan. Yeah, so just look at your chart. This is where support and resistance lines are so incredibly important, and that's why Gary takes a lot of time to drive that home. You ever notice he puts a lot of lines on his charts, and we're all talking about support and resistance. And the reason that we do that is because these areas of support and resistance become targets and opportunities for longs and shorts. Yes? So if we look at this chart, we say to ourselves, well, I'll tell you what, if this is going to really be a downtrend, theoretically, we should get a bounce up into this area right here and potentially roll over to get us short, right? We're planning ahead. What I just said hasn't happened yet. We're thinking ahead of what could happen. And then furthermore, we're taking it one step further and we're saying, okay, if it does that, we are going to do what? Look for a short, right? All right, well, let's advance it and see what happens. Here we go. We come up to where? Here we go. Come up to where? And then it breaks down, comes right back. Did it almost three times. Right here. Right here, almost. Tried to. And definitely right here. Those are all what? Shorting opportunities, right? Shorting opportunities. It's coming right down into the background has turned red. The bars are red. We are stair-stepping down. We are retracement traders at support and resistance. And it's coming right up and it's hitting that bottom support and it can't get through it. Just textbook rollover shorts, right? Everybody see that? All right, I got a question for you. Ready? I'm going to throw something at you. Everybody ready? Here it comes. I'm going to throw a curveball at you right now. I got a Nasdaq chart up. Here's Nasdaq right now. All right, who would be buying Nasdaq right now? Right here. What do you want to do? Anybody buying it with me? I put a market order in right here. Anybody want to get long Nasdaq with me? What do you think? There's some money to be made here. Looks like it's taken off. Look at this. Look at this nice up move. Green background, blue bars. Just hit this nice swing. It's got to be going up. What do you think? Market buy? Let me get it on. Let me get a thing on there, and we'll buy it. Let's do it. Who says that? Jonathan? He must be the daredevil. Only non-Viper traders would be buying here, says Walter. Okay, I love it. Good. That's perfect. All right. No, we do not buy thrust moves. You take anything away from tonight, please, 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 please. I mean, hopefully you're going to take a lot more than this through, but it's got to pull back. Okay, so most of you said no, and that was a correct answer. If it pulls back, where would you be interested in taking along? What level? What level might you be interested? If it retraces, I don't know if it will, but we'll watch it. What areas might be sort of juicy and ripe for a potential long trade? The trend is up, so we're buying bounces, right? Where would you want to get in it if it did retrace? You put a level or a number or an area, either way. Where would you buy it? That's the question. Where would you buy Nasdaq on this chart? Anybody? Where are you buying it? I see some numbers coming in. Kenneth would buy it 02 3/4. Kathy has a range 02 to 04. Good. Kim, I see that. Jonathan, looking good. Chris, Kenneth, around the mid-band. Okay. Michael P, Walter, some good numbers. Ted, JR, mid-band area. Perfect answers. Excellent, most excellent answers. And, excuse me, right on the money. Let's talk about this for a second. On a shallow retracement, the market may only come back into this area right here. So when you think about pullbacks and the strength of a move, sometimes they pull back very, very, very shallow. Sometimes they'll pull back sort of a middle amount of effort, which would be right in here. And then a lot of you said, I'd really like to see it come back into the mid-band area, which would be right in here. So, and this is a struggle for a lot of traders, and it might be for some of you in here tonight, is how to gauge the depth of the retracement and where to get in it, right? That's probably an issue that some of you are struggling with right now. So a healthy way to think of it is this, is that we don't want to lock ourselves into one number and just stick to it and say, you know, by goodness, if it gets to 04.25, I'm going to buy it. Well, the fact of the matter is that we don't know on a retracement whether it's going to come to here, you know, to here, or even to here. We don't know when it's happening in real time. This is real time. We're watching it in real time. So how do we know? We think of these areas, 1, 2, or possibly 3 areas, or even a zone or an area. You can just sort of envision this whole area, if you will, as an opportunity zone to get long. So what we're looking for is it's going to eventually sort of find, meander, chop its way down, depending on how the profit taking occurs in the up move. And then it will find some kind of equilibrium or bounce. So we're looking for a consolidation patch that might look something like this. Or we're looking for a bar reversal where it comes down, 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 hits an area, bar or two, and then reverses up. Those are all patterns we're looking for in our opportunity zone, right? Let's take Nasdaq. Everybody did really well on that. Congratulations. Everybody did perfect on that. Let's go back and look at NASI at 7 o'clock today, 7 a.m. Pacific, while we got the chart up. Ready? NASI's been kind of an obtuse, ever since they took Apple out of the Nasdaq and put it in the Dow, it's been kind of an obtuse little doing the thing on its own program. You notice that? That's why, you know, NASI used to be my best friend for the longest time, but I tell you, she's been a lot different since Apple moved. You notice the movement, the price pattern is very similar to YM. They do track each other, and they do move usually in conjunction with each other. Sometimes they're, you know, one's divergent from the other. YM is, of course, the mini Dow. They're both $5 a tick. They're good starter instruments. They're good instruments to learn on. They're a little bit slower and more methodical than the Russell and some other instruments. If you're trying to look for something you want to learn, YM is a good starter. NASI is a good starter. You know, at $10 a tick, Russell is twice the risk. Now you might say, well, for the same move, I could make twice the money. Yeah, but it's twice the risk. For the same stop here at 10 or 12 ticks, you're risking $50 or $60. Yes, that same amount on the Russell is double that amount, right? $100 to $120. So you got to sort of weigh all that in. So just like YM did, we got this very methodical sell-off here. Market broke down shortly after the open here, just before 7 o'clock. We get a nice move. We get a retrace. Yellow bar just under mid-bar. Boom, another thrust. Another check here. Boom. We come up, and what starts to happen here? We're seeing that price pattern we discussed, right? Here we go. Take out this swing. Come back. And the first thing we make note of in real time while it's happening is that thing we talked about earlier. What is it? I watch this all the time. This is probably one of the most important things I watch when I'm trading, is what I'm showing you right here. This is, of course, there's a lot of important things, but what's happening here? This is your clue. Remember, this is your first clue. When this happens, this is like, heads up, what's going on here? What's going on here? And the minute you know it is when it does this. It pauses and stops there and then starts to do that. That's when you know. It's a higher low. Did not make it to the bottom and did not break it. This is significant, in my view, when trading in real time. This is your first clue that something might be going on. In and of itself, when this happens, just to be clear, let me blow this up a little bit here. All right, when it happens, as it's happening right there like that, and it looks like that, that does not necessarily mean anything. It's just sitting there like that, because you're kind of in no man's land. You're not up here, and you're not down here. You're in the middle. It's trying to decide which way to go. However, when the bars start breaking back up like this, see them? Especially when you take that swing out. That's important because now that's telling you a possible trend change is afoot. Everybody see that? That's how we connect the dots on V bottoms and trend changes. I'm showing you the pattern. I'm just showing it right to you. This is the second time we show this pattern. Very important that we make note of these little mental things. We try to help you in the room because I'm trading this right along with you and I'm watching it in real time just like you guys are. Guys and gals, everybody in here. All right, so now that it's broken up, what are we doing? Watching for a pullback, right? We're watching for a pullback. And where's our opportunity zones if it's going to bounce? Could be in here. Could be around the mid-band. It might go a little lower, just below the mid-band. This is our opportunity zone where here again, we're visualizing out beyond the edge of the chart. We're saying if it pulls back anywhere into here and bounces, we're going to be looking for a long trade, yes? On a bounce. I know I should have asked that question. That was a good question to ask the team here tonight, but I know, I just wanted to sort of speed things along. All right, let's play it out. Let's see what happens. Ready? All right, here we go. We're kind of consolidating a little bit above above our swing here. We've taken that swing out. Trend change is confirmed. By the way, even if we have a trend change, it doesn't necessarily mean that there's going to be follow through to it. I just want everybody to be on the same page with that, okay? Just because we've broken that swing and it appears that the trend has changed, it needs to do certain things to remain a trend change, which is what? Hold a higher low, right? So let's play it out. Let's see what happens. Let's pretend we're watching this in real time. Poke up a little bit above that swing just by like a tick, coming back down, sort of checking around, bouncing around up here. Here again, I just want to say it. I don't want to beat the dead horse, but I have to say it. When market's thrusting up here, we are not buying it. If you're looking to get long, that's the thrust move. We have to see some kind of pullback to somewhere, to hopefully in our upper little opportunity zone here. Somewhere in here, we're looking for a bounce to get long. That's why you hear calls in the room that correspond to what I'm saying here. Is, it's thrust up. We're not getting in here. We got to see a pullback into this, 76 3/4 area, plus or minus a couple of ticks. Pulling back. What's happening right now? Here, let me blow this up. Let me blow this up. Blow this up. What's happening? What is it doing right now? These bars right here. Where are they located? Remember we drew this earlier? What do we draw here? These little circles and boxes. This was our opportunity zone to get long, yes? It's in the zone, Walter. That's right. It's coming into the zone. So what are we looking to do? Would you buy it here? Okay, hold on. Let's give it another couple bars. How about here? No? Give it another bar. How about there? You put a buy in, you tell me when you're buying it. I'll advance it bar by bar. You tell me where you're buying it. It's in the zone. Walter told it, but Walter said, Walter's in. Kathy doesn't want it anymore. Okay. Ted and Michael P are getting long on a bar close up. Ted's buying in here. Okay. All right. How about now? How about now? Anybody in now? Coming back up to the mid-band, breaking it. How about now? How about now? Obviously, by the time it gets up to here, you're not saying I'm getting in because now you're at the tail end of the thrust move. So obviously, if you waited to get in until up here, that's not good. The traders who said I'm in and are buying down here are already getting out up here. We're taking some profits and getting ready to bank a runner. Get another pullback here into support. Another high. This has been 1, 2, 3, fourth high or low. Trend is definitely up, no question about it. Now background's changed, stair stepping, green background, going higher. Turned out to be a heck of a nice trade on the long side, didn't it? Yeah. So it's really a step-by-step process. Okay, when we're looking at V bottoms around 7 o'clock, and the scripts all over the world are doing this. Okay, it's just the way it is. And it doesn't, like I said, it doesn't happen always right exactly at 7 o'clock. It's in a little window of time when that tends to happen. You tend to get a V top or a V bottom. You tend to get a trend change sort of somewhere in there. I have to tell you, around 7, sometimes, particularly if there's news can give you a reversal. News can give you a continuation, but around that time frame, and adjust that, of course, if you're in the Midwest, that'd be 9 o'clock, right? Yeah. So, and then we just use our tools and our skills, and we watch the swings, and we decide. We carefully pick our spots. I mean, with all due respect, with a couple of contracts, if you bought somewhere in here, even the close of this bar above the midband, where some of you said you were getting in right there. Some of you are more aggressive. Some of you bought this bar reverse right here. What you do, you have a very tight stop, very little risk in these moves. Okay, when it bounces, you put your stop just under here, a tick or two under there in case it breaks down. So you're not risking a whole lot. Even up here, you're not risking a lot because your stop's right here, right? Then we thrust up, and let's suppose you got filled and got out. Let's say you got out up here, somewhere up here. Came down through these stop dots or even through this little trailing stop line here. So what would that be? Let's see, 77 fill. I'm just going to use round numbers to make it easy. So I have to get my calculator out of here. You got out at, I don't know, 80, 85, 86-ish. That's 9 times 4 is 36 ticks. 36 times 5 is what? 136 times 5, $180, 2 contracts. 2 contracts on it, $360. For some traders, that might be your goal for the day. 350, 360 might be done. That might be your one and done. You got filled at 7:05, and you were out of the trade by 7:10. You're in the trade 5 minutes. That's it. 2 contracts. You're done. That's what we mean by one and done, 1 or 2 and done. That's assuming you didn't get any of the short side over here with this beautiful. These textbook rollover shorts. I mean, 2 of these could have done you pretty good too. Had that one right there. Let's see what that might have given you. Maybe, I don't know, 75, 86, 11, 40 ticks maybe. These rollovers here, you probably got another 40, 50 ticks down. I know I traded this. I made some money on these shorts. I made a lot of money in the short side. Of course, I'm leveraging up. I'm putting a lot more contracts on. So, I have to tell you, most of the time, by the time you get to 7:30, certainly before 8 o'clock, I'm pretty much finished for the day. I'm done. I'm absolutely done. And if it starts chopping around like it did, and I'm not going to chase it around. I'm not interested in plowing the hard-earned trading back into the machine. Where the heck did that trade go? Oh, here it is. Tell you what, before we run out of time, we got about 10, 11 minutes left. Anybody want to see crude oil? Any crude traders in here? Anybody want to see crude oil? All right, I'll drag it down. I got a chart right up here. Now, I've had this discussion with several traders, in fact, very recently, about this very issue of, do you have a fixed target or do you go for runners? Let me explain sort of a healthy way to look at it. And if you can do this, especially on YM or Nasdaq at $5 a tick, it's a good way to do it. Let's suppose on this trade here, you were filled on the top of this bar. And so your initial stop would be down here. Stops, if you had 2, okay? And you're filled here. We're doing a hypothetical. And say you're using Object Trader, or say you're managing your trade, and you want to have like a 5 or 6 or 8 tick target on number 1 contract, and number 2 would be your runner. So in that case, your fixed target would be up in here somewhere. We'd take out the first one because I think this move was 77 to 82.5. This little bip here was almost 20 ticks. So halfway up, if you had a 10 tick, oops, wrong one. Sorry about that. Yeah, halfway up 10 ticks, you would have been filled on your first target. Oh, Jiminy Christmas. Okay, wake up. Maybe in there somewhere. And an important thing to do when you take that first target out, even if you're using Object Trader, which will manage it automatically for you, we take this and you can set OT up. I'm not going to get all in the detail about that. In fact, I have that in other webinars. You bring your break-even stop to within 1 or 2 or 3 ticks of your entry. So now your stop on the rest of it moves from here to up here, right? So even if it comes back through here and stops you out, you still made money. You have what's called a free trade working, right? You've made 10 ticks on the first burst to here, and now you have your runner. Okay, and your runner, you're going to trail your stops, and that's why I try to help you in the room. If you have runners, I'm calling stop levels out as they're occurring. And after you get a nice run up like this, you trail your stops up, and you probably would have stopped out somewhere in this area. 1 or 2 and done. That's what you want. All right, let's get crude down. Ready? Stand by. Hold on, it's on another screen. Give me a second here to drag it down. By the way, before we go, look at the right-hand side of the chart. What's happening to Nasdaq? What's happening right now? You want to buy it now? Everybody want to buy it now? What do you think? It's right here. Level 650. Got a little sort of doji candle right off our support level. You want to buy it or wait? No, Kenneth not buying it yet. Any buyers? We touched our top. This was our top little zone. Remember? We had that little zone drawn there. Came right to it. Trying to reverse up. Too early? Okay, nobody wants to buy it. All right, no problem. All right, let's get crude down here. Here we go. Okay, here's what I'm going to do on crude. Are you ready? First question on crude. Here we go. I'm going to give you 10 seconds. I'm not going to give you a lot of time. Is this a trend change on crude oil, yes or no, on the right-hand side of this chart? 10 seconds. Just a wire and in. Has the trend changed? The trend was down, obviously. That goes without saying. I mean, it was just a monster sell-off here. It was just a huge monster sell-off. Is this a trend change right here, yes or no? 8 seconds left. Simple question. 5 seconds. Yes or no? Are you buying it now? Or are you buying it here? Is this a buy? Is it still short? Or are you getting long? Is the trend changed? 4 seconds left. Ready? Joseph K. squeaking in there. Kim, Chris, Balraj, John, Chris coming in. Okay, we got time's up. No. This is definitely not a trend change. Okay? We only had a couple of yeses. Everybody said no. Good. So here's the thing. Who said this? Joseph K. needs more evidence. Good. So look at our pattern. We came up. We hit the mid band with our yellow bars. We rolled over. We made a valiant attempt to get back to the lows, and we almost did. Almost checked it. See, very close, within a few ticks. We come back up. We sort of wiggle around. We're still looking short here because it has to pull to another higher low and take this swing out to the upside, like we saw in the other charts, right? This is the reversal patterns we're looking for right here, right? It's got to come up, So if I showed you this chart right here and I asked that same question, is this a trend change? The answer would be no, right? No. Okay, now it pulls back, it holds the mid-band, bounces and takes that out. Is that a trend change? Yes. See the difference? When this is happening in real time and you're just sitting right here, that is not sufficient evidence to be a trend change. When it comes down into here and holds a higher level of support and then takes that out, yes, that is a confirmed trend change, like you had right here. See it? Okay. How about here? So the answer was no, right? The answer is no. Let's advance the chart. What does it wind up doing? Chops around, bounces around, can't take that swing out, breaks support. There's several areas you could have boxed in using your OT region box in here, favoring the short side, not the long side. And then it tanks. It falls. Trend continuation, falls off the map, and that turned out to be a beautiful trade right there, actually short. Right here. Like you could even boxed it in here for that matter. Dropped another 60 ticks. It could have been a one and done. You could have missed that entire 200 tick move and just caught that one with a 1 or 2 contracts. That would have made your whole morning. Yeah, so you got to be really clear, okay? And you know, we try to help you see this in real time in the room. And you know, so you can pick these trades off too, just like we are. Let's go look at a couple other things on crude. Stand by. It takes a little time. Don't worry about it. If you still feel like you're struggling a little bit to see some of these setups, don't worry at all about it. It takes time. Not going to happen overnight. Eventually, if you put in the diligence and the effort and study and you work, you'll get that aha moment. Here's right at the pit open. Okay, ready? Here's the pit open. What are we doing right here? Here's the pre-market on crude. 530. I'll help you out a little bit, okay? I'll help you out a little bit. Here we retrace. We come up, we hold ahead of the open of the pit. Hold a resistance area under the mid-band. Excuse me. A tickle in my throat. Hold on a second. Sorry about that. Good. Michael P. is the answer I was looking for. Box it in for a short. Perfect. That's precisely what you would be doing. Notice how we're getting a methodical move to the downside. Here's the thrust. Here is the retracement. Here's the fresh thrust in the trend direction. Background is red. Bars are red. Stair stepping down. Textbook downtrend move. Yes? So in a downtrend, we are looking for retracements up at or near the mid-band for consolidation and rolling over to take a short. So if you had object trader on the chart, you are only taking shorts. You would not enable the long side. And we all know the reason that you do that is because if for some reason these bars go a little bit higher, like this, you don't want to get sucked into a long trade. You're boxing in, favoring shorts only, because the trend is down. Now, we still have people in here tonight who are struggling with this trend change issue. Let me do a couple of crude oil setups and see if we can get clear on that. Anybody still unclear on what constitutes a trend change or not? Let me do a little quiz. I'll tell you what, we're almost out of time. We've got a few minutes left here. Let's do a couple of quickies, a couple of 10-seconders, or I'm going to pop some charts up here, and we're gonna all get on the same page here. Okay? Ready? Still, I see some people still not sure. Confuses me on trend changes. Seeing it in real time confuses me. All right, let me see what I can do here. Let's take the next few minutes, and I'm going to do some 10-second quizzes, so you can visually snapshot in your own mind when the trend change occurs. Okay? I see your questions on the opening Band-Aid. By the way, I have the webinar this Saturday, and that is the topic, is trading Band-Aids, specifically in detail how to trade Band-Aids. I'll spend a whole session on it. You can ask all the questions you want. But before we wrap tonight, let's take a few minutes so we're all clear on the trend changes, okay? Here we go. Is this each one of these are 10 seconds. You got to put a Y or an N in quick. Is this a trend change, yes or no? Eight seconds. A Y or an N. It's really simple. Sometimes you got to be able to peel off an answer in 10 seconds or less. Is this a trend change, yes or no? 5 seconds left. Three seconds. Time almost up. Jonathan squeaking in here. Anybody else? Yes or no? Time's up. Yes. And let me be clear. So there's no confusion about this. I want everybody. Almost everybody said yes. I'm going to make this as just as clear and simple as I possibly can, so that there's no confusion about it. Can you see where the market came up through here and formed a little swing area right in here? Let me just be really clear about it. After the market came up through the midband, and you can use the midband as a guide. Most of you have heard me say this before, okay, and I'll reiterate it so it's clear. When the market came up to this swing and it pulled back and held a higher level above the midband and then bounced and took this swing out to the upside, that was what we call a trend change confirmation. Now, you've heard me say this just a few minutes ago. Just because this happens does not necessarily mean that we're going to get the follow through that we're looking for. However, we are now going to be trading the long side, looking for pullbacks into support to buy to get in this move. Mama says the spaghetti's ready and you got to go. Okay, Walter, no problem. See you in the morning in the room. I know, we're going to wrap up here. I'm going to do one more of these, okay? I'm going to do one more of these. Is everybody clear about that? Does everybody see that? It's right here. When it breaks that swing, that's it. Now the trend is up. You're looking for pullbacks. Looking for pullbacks. You get one right here. All right, let's do another one. It's tougher. Ready? I'll make them tougher. I'll make them a little tougher. Now, by the way, when I show these, I'm not asking you to get in or out. That's not the question. The question is not, are you going to trade this? The question is it a trend change or not? Ready? Here we go. 10 seconds on the clock. Is that a trend change? Yes or no? It's tougher. I'm showing you different ones. I'm not going to show you the same thing all the time because the market doesn't work like that. Market's going to throw all manner of different stuff at you. You got to know what you're looking at. A little bit tougher one. I'm going to help you out a little bit. You had a pretty well established swing on crude oil that's lasted a long time right in here. And remember what I just said, okay? I'm not saying, the question is not, would you buy or sell here? That's not the question. Okay? The question is, has the trend changed, yes or no? Okay, hold on. You can see some answers coming in. All right, we got a mix. Time's up. Yeah, in my view, yes. The answer is yes. The JR says there's not enough evidence. Well, I think and this doesn't always work like this, okay? You can look for similar patterns, but the market just doesn't always do what you want it to do. Here, for instance, we have a very nice confirmation of a trend change. Before we answer this question, let's talk about this. This one was much more methodical. We come up, we retrace to a second higher low, looking to the left here. We thrust up through that swing, and you could make the case that the fact that this swing was taken out was a trend change, and we confirm it by holding much higher lows. By that point, it's 1, 2, third higher low, and we take that swing out. So there's no question by the time you got to here that trend has changed. And you're looking to buy pullbacks, and you got a nice pullback and a consolidation right at the midband, right? Now, in this one, what you're probably saying to yourself, and the reason most of you said no, I'm guessing, is the fact that we have a thrust here, and you were looking for some confirmation that the market should do some kind of retracement back up into here and roll over and break down. That's probably what you're looking for, yes? But let's look at what actually happened. That actually happened right there. So what I'm trying to tell you is that markets in some cases will move methodically and set up the nice patterns that you're looking for. Retracing to midband, consolidating nicely, breaking up, following through, taking swings out. Sometimes they don't do that. Sometimes they'll come down, they'll break support. In my view, just to look at this area, when it came down here and then pulled back a little bit off of that thrust and then took it out, yeah, now you have a confirmed trend change. Comes back, pulls up here a little bit, consolidates. You're not going to win all the trades. I mean, if you notice today, even today and yesterday, there was several trades where the trend had changed on Nasdaq and YM, and it ran away without me because there was not a sufficient retracement for me to get in. So that's going to happen. You're not going to get every single trade that comes along. You're going to get hopefully most of them and get in and out at the proper time. Can everybody see the difference between this type of pattern over here and what happened here? Very dramatically different. But I can tell you that when a market thrusts through a strong support level and then consolidates or just retraces a little bit, you pretty much have a trend change afoot there, big time. Yeah, sometimes you get the consolidation sometimes it runs away without you, but it's okay. Just patiently wait for another setup, and when you get it, nail one or two of them, and you're done. All right, we got a little bit over here. I'm going to go ahead and wrap. Let me answer the phantom question. Hold on a second. Give me a minute.